Coming to you live from Thinkorswim headquarters in Chicago. Fast Market. Now, Kevin Hinks and Tom White.
Good morning and welcome to Fast Market. It is Thursday, July 16th. I'm Alex Coffey and I'm joined as always by the co-host of Fast Market, Mr. Kevin Hinks. This morning we're also joined by the Chief Market Strategist at TD Ameritrade, Mr. JJ Kinahan. Good morning to you, JJ, and thanks for joining us this hour here. Guys, on what's a little bit of a sour morning for the markets. Kevin, the S&Ps right now down 20.75 in the futures, pretty in line with the cash index, which is also down about 0.6%, hovering around the 3,200 mark. So, Kevin, when you look at this is an extension of kind of the trend that we've seen throughout most of the week, which has been the reverse of the trend we've seen for 3 years, which is actually the tech stocks and the NASDAQ heavy tech index actually underperforming its peers.
Yeah, it looks like, Alex, at least to start the last day and a half or 2 days of trading, that they're consolidating in the NASDAQ, and it looks like it's interesting that with Apple and Microsoft down on the day and Boeing down on the day, the Dow Jones Industrial Average still pretty close to unchanged on the day. So there's actually leadership coming from other areas. Now, yesterday was a really interesting day because the NASDAQ was soft, but everything that they had left for dead in the previous 3 months was what was in favor yesterday, right? Airlines, cruise lines, hotels. So it's kind of interesting to watch how this plays out with weakness in the NASDAQ, clear weakness in the NASDAQ, but not necessarily in any of the others. Very little damage in the other three indices, but 1.7% of the NASDAQ is not a small move, but really not leaking in yet to the other three indices. They're down, but they're not down significantly, Alex.
Yeah, and JJ, I'm glad that he brought up yesterday, because the one thing that I noticed yesterday was that a lot of that move was clearly on the heels of the headlines regarding the vaccine news. And it made sense to see kind of the underperformers, things like Amazon underperforming, that have clearly been tied to the shutdown being a positive, even at added cost, to a company like Amazon, which derives so much of its money from the cloud space, which obviously is getting a boost from the stay-at-home trade, as well as, of course, its retail e-commerce business, which just boomed as a result of store closures and more people not leaving their homes to avoid getting sick. And so seeing things like Amazon down, seeing things like Netflix, we're going to talk about later on in the second half of our show, down, at least initially, as you saw more cyclically tied names start to outperform, to me was a big tell that maybe it isn't as much money coming off the sidelines now, JJ, as it maybe is just money coming out of some of the winners into some of these underperforming names.
Yeah, absolutely, Alex. It did seem like a big sector rotation as the stay-at-home trade, so to speak, faded a little bit. Kevin just brought up some good points about the Dow helping things out this morning. What's interesting to me is the financials all just kind of turned around here in the last little while. And, you have Morgan Stanley up good on the day now, I believe about 2.5%, 3%. Goldman's higher, Citigroup higher. Bank of America still trailing a little bit. So that's been kind of interesting to see how that's sort of happened this morning, even with the 10-year lower. When you speak about yesterday, I think the one area yesterday that, besides what you're talking about in terms of selling some of the stay-at-home trade, the place they went, which may have surprised many, was the Russell. The Russell was up 3.5% yesterday. And so, again, if America sort of gets back to work, there's one place that has been a little bit ignored or, kicked around a bit, where the money came to really, really quickly yesterday afternoon.
Yeah, no, it's a good point. I'm glad you brought up Bank of America. We had some existing positions we got to take a look at here, Kevin, on the heels of earnings. We can start with Bank of America. And if you looked at just what we had in the existing portfolio here, Kevin, it might be a bit of a head scratcher as we're short 6 of the 24 puts and long 4 of the 22 puts. But for those who caught yesterday's show, we basically showed a couple ways to do a very similar position, and one just to find the risk and reduce some of that capital required. So we sold 2 just cash secured 24 puts, and we sold 4 of the 24-22 put verticals for this Friday or tomorrow. And Kevin, we have a very small winner on our hands here, as the stock is, not really done a whole lot. It's slightly above our short strikes, but not by much here. And so you've seen a little bit of volatility come out of these options, but the movement almost kind of counteracting that as it's inched closer to our strikes. But like I said, hey, small winner here, about 10 cents for every one of those short puts that we have. How do you approach management in a situation like this where you got a day to go, you're kind of right there, not really a huge profit here, Kevin, but it is a profit. And, you see just, hey, it's only one more day of risk. But with that one day of risk, when you're right on that line, it can really go one of two ways.
Yeah, but remember, our game plan going into that trade was that we're not afraid of participating in Bank of America below 24. So, and by the way, when you trade Bank of America, unlike the environment where we find ourselves with so many names over $1,000 in trading such high prices, Bank of America trades $24, and you're just not going to see the levels of premium. So with Bank of America, you have to adjust the lens that you view that stock. It's about percentages, not about, big premiums and things like that. You've got to be used to smaller numbers and smaller levels. You got to look at it from a percentage standpoint, not necessarily a whole dollar standpoint in Bank of America, because it's a $24 stock. There's not a lot of those out there, especially legacy banking names like a name like Bank of America. So I'm perfectly comfortable. Remember, because part of our thesis yesterday was if it gets below $24, we're okay there anyway. And we're going to turn that into a covered call strategy below $24. So, it's important that what we did yesterday, we made comparisons. We compared Bank of America to more JP Morgan. We compared Morgan Stanley on the midday trade show more to a Goldman Sachs. And that's what's showing up in some of these numbers. More of a traditional banker in Bank of America, more of a trading background in Morgan Stanley. So, banks all seem the same, but they're actually very different. And Bank of America is acting pretty similar to what we thought it would do. And that $24 level is pretty significant here in Bank of America, guys.
No, it's a good point. It's well said. I'm glad you brought up kind of that initial thought process that we had going into this trade, because that's what you should do when you put these positions on, JJ, is you had a plan going in, and unless something's meaningfully changed, that's largely the plan that you're probably going to stick to. I know that's something that you're often, teaching when you're speaking to crowds, and when you're teaching things, JJ, in regards to this business, is having a plan and sticking to that plan is so crucial to success.
Absolutely, and Kevin stated it perfectly. The most important thing was he was comfortable. That's the really big words. I'm comfortable with this. I laid it out beforehand. I knew what my risk could be. Kev just walked it through perfectly. And as I said, I think whenever you can make that statement, I am comfortable, even if things go against me, you got a good position on it. You're not. I think people have to separate one thing, and that's logic from making money. Sometimes you're going to lose money even though your logic was perfect. That's how the market goes. But you know what? If you use the same logic, and it's good logic time after time in terms of spelling out your risk beforehand, and your reward is in line with that risk, over time, those things tend to add up. And so, you'll occasionally you lose money, but overall things tend to come to you, especially in the types of trades you guys are putting on here every day where they're high probability trades. You spelled it out, you did it, and now you take the one more day of risk. It's a risk-reward game, and you're comfortable with the risk.
Yeah, no, well said, guys. What I'm going to do here, since we're short 6 of these puts, just, I don't know. I just feel better maybe if it was around 5, kind of like 510. To me, 600 shares is a possibility. This seems kind of weird. So what I'm going to do, this is just simply just a feeling thing. I'm going to buy back one of them so that if it does sneak below 24 and we are assigned, we'll basically have 500 shares, just a little bit more appealing on the eyes, I guess, for just that. And also we can kind of compare, what would have happened had we taken them all off here tomorrow. So we took it off for around 29 cents there. And so locked in a small gain on one of those short puts, guys. But, Kevin, before we dive into Domino's, I want to get your thoughts on that, too, because I think what JJ was getting to is a really important point that we try to stress. It's just the idea of, while we're doing risk-defined trades, while they're high probability, I think that we need to really make sure that it's understood that just because something's risk-defined doesn't mean that there's not risk. It's just what that theoretical maximum amount is. And that's the important piece, is where you're exposed and what is your extent of exposure. But it doesn't mean that you don't have risk and there isn't a possibility where these positions can't work out.
No. I mean, every time you touch this stock market, either via stock or options, there's risk, right? There's very few riskless trades. But what we stress on this show and throughout TD Ameritrade Network is get paid for the risk that you want to put on. If you're going to put something on and make sure and assume risk, make sure you're getting paid for the amount of risk that you're putting on. And that's why we always talk about that sweet spot where the probabilities meet the premiums. And, getting paid for the amount of risk that you put on is one of our key initiatives here, guys.
All right, Kevin. So we started with Bank of America. This is where things get, I'm going to need some help here and figure out how we want to approach this. Although likely, it may just be a wait and see what happens. Domino's Pizza, we have the 1x2 on where we're short and in the money put, bought 2 out of the money puts. And this morning, the stock was trading close to that all-time high mark of around 415, I believe, earlier this morning. And, I got up to a 422.15 mark. And so this is where, if we would have had the luxury of having the show on a little bit earlier, maybe, just maybe, we have an opportunity to get this off. But, hey, we're managing these things in real time here on the show, and this is the situation that we're in. And so at 406.91, you can see where this is on our risk profile. And so, Kevin, the worst case scenario of this trade is a move right to 395. And, of course, we have 2 break-evens, one above around 418 and one that's well below here, below about 372. Because essentially we're short a put vertical and we're long a put, depending on how these actually respond to these moves. But when you're looking at this, Kevin, there's still time in this trade. This is one that's going to move pretty sharply depending on what Domino's does. And with the market sinking here a little bit, I'm not surprised to see that Domino's has come off its highs just a little bit.
Yeah, the price action in Domino's and their release of their earnings, this price action, as we see it right now, is not favorable to this position. We didn't get the catastrophic move that you and I discussed yesterday, and like Folio's data talked about, their numbers were pretty positive. And so even though this stock was at or near an all-time high and has moved down ever so slightly, I think the price action here, Alex, is horrible. And I think probably we should give this a little bit more time to see if the overall market does. But I actually prefer taking this off and admitting that we looked for a move and we didn't get it, as Domino's Pizza's news was kind of neutral in terms of its overall story. So, the price action here is not favorable to this position. Alex?
Yeah, and JJ, I think what Kevin's getting to there, and of course we don't know, what the perfect decision is ever when you're looking to make a decision where it involves either taking a loss or taking a profit. Kind of that hindsight 2020 thing, unfortunately, you don't know until it's after it's been done. But I think it takes a high level of expertise and maturity to say, I'm willing to say, maybe this one didn't work out yet, and it's maybe a decision where I have to think about taking a loss now, to prevent it becoming a larger loss in some point in the future. And in this case, maybe by tomorrow, it's a short-term trade. And I think that's something that's very difficult from a psychology standpoint when egos are involved, and especially when it's a bigger position as well, and saying, I don't want to take the loss, but I might have to because that's what the plan says, or because the action that I'm seeing doesn't look favorable.
Absolutely, and it goes back to where we just started a second ago. You can have good logic, and sometimes the market action just doesn't work out. So what does a good trader do when the market action is not working out, even though it's a good trade? They take it off, live to fight another day, cut their losses, and walk on. It's the old, and for those of you who are newer to this, there's an old expression on the floor I know Kevin knows well, and it's, don't eat like a bird and poop like an elephant. And too often people will take the bigger risk, end up losing lots of money, but on a small profit, they'll take it right away. And that is a sure path to disaster, and it takes people a while to learn that, to actually reverse that and say, you know what, sometimes I'm going to have a small loss, I'm going to take it, I'm going to get out, so that my winners are actually, returning a higher percentage for me than my losers. And that's a switch that it takes a little while to learn, I think, for many people.
And guys, so what I'm doing is I have an order in to buy it back at $15. It's slightly below where we're trading now, but it's in our order book now, Kevin. It's on kind of our radar, and it's something that we know we got to do something about. And I think that's also another, if I had a little tip that I would give to those at home, especially if you have a lot of different positions in your portfolio, is it just being in there as a working order? Well, hey, maybe this particular order doesn't get filled, but now as I'm looking at my things, I'm trying to figure out, what I want to do today, this is always going to be front and center now, and it reminds me, hey, that's still out there. That's still something I have to do. I know that that's something that helps me, Kevin, when I'm looking at stuff. I don't know if you have different things that you do to keep things on your radar.
Well, I certainly am aware of the positions that are doing well and the positions that are struggling. And, I manage both of them accordingly, but, I've been blessed with a very short memory. So I have it's key to have the ability to make a decision on a trade, give it as much time as you think it needs. If you're not getting the action that you require to be profitable, get out and move on to the next trade, and just don't look back, right? It's all about the next trade, managing the risk on this trade and moving on to the next trade, not dwelling on either, frankly.
Yeah, no, absolutely. The ability to make a quick decision is a very important one in this particular business, especially when it comes to trading. JJ, another one we want to talk about is Walmart. Walmart in the news the last few days in regards to kind of its decisions around wearing masks. Like it or not, it is what it is. And when you look at Walmart right now, the stock not really reacting much, at least today. Obviously, it's kind of gone through the news flow a little bit already. But right now, up 2 cents, it's bucking the trend of the overall market, actually holding in there pretty okay today. As we zoom in and look at this particular candlestick here, at least the last couple, JJ, yeah, I know none of us are, self-proclaimed technicians or chartists, but a little bit of some spinning top actions going on here, which, from what I hear, means there's maybe a little bit of uncertainty here on what may happen next.
Yeah, so one thing, I'll go back to what Kevin said in terms of making quick decisions. My favorite thing to do is to go out to eat with other traders, because you order in like 6 seconds. Nobody asks, hey, what do you recommend? Everybody's just like, here's a decision, I'm going with it. But anyway, that said, Alex, exactly with Walmart right now, I think the whole market has a little bit of doubt. The retail sales number this morning was really good, but then we look at those numbers from Japan China. I apologize for that. China, where, the GDP was so good, but the retail sales element of it was something that people had lots of doubts about. So with that, Walmart's just off a 52-week high also. And so, when I look at Walmart, I still think it's a great company, longer term probably do really, really well. They have earnings coming up in August, but I do think you can take advantage of the fact of exactly what you're saying. There's some doubt right now, and maybe thinking about, selling some call vertical spreads up above that 52-week high in a very short-term play.
Yeah, and JJ, on that too, when I look at something like Walmart right now, and you look at kind of how the price action seems to be leveling off, that makes a lot of sense to me, especially when you have the overall market showing a little bit of, let's say, willingness to go down for a day or so. Even if it bounces back, it kind of shows that maybe some of this momentum that had been pushing to the upside is starting to wane. You look at how much of an inside day this is in Walmart. These green and red lines represent yesterday's range, so it shows just how tight of a range it is today. You mentioned earnings not for another month, so maybe not a huge calendar event that could move Walmart around, at least for a little while. Still going to be some macro headlines, of course, that can weigh on a name like Walmart. But, JJ, this might be one that exists in a portfolio of a long-term investor, and they're looking for ways to trade around their position. What you're describing is like the ultimate complementary trade to an existing long-term, bullish stance. If you're a little bit, let's say wary of what may happen over the next few weeks or next month before earnings, as maybe, Walmart just kind of hangs out. It's a way to show a way to add strategy to the portfolio, maybe make some additional premium around that existing position. And of course, it also can exist as an existing just independent trade if you're not involved in Walmart as well. But let's walk the viewers through what one you were looking at, JJ, in terms of that Walmart call vertical.
Sure, Alex. I was only looking 15 calendar days out, so 2 weeks from tomorrow for that expiration. And, the 52-week high is just, 134.13, I believe it is. And so with that, maybe we start just above that. Give ourselves a little room. Start at that 135 call. And of course, as you guys talk about every single day on this show, we just did a long part about this, define that risk. So to define that risk, I want to buy the 137 call against it. For those people who are newer to selling call vertical spreads, one thing to keep in mind, the trade's all about the 135 call. The only reason you're buying the 137 call is so that you are saying, okay, I'm comfortable, back to that word Kevin talked about earlier, with the risk that this may be. We're going to collect a premium. Earlier this morning, it was right around 55 cents. So, again, you're risking $1.45 to make 55, very high probability trade overall, and comfortable with that risk overall. To, if things go really badly, lose 145 bucks, make 55 bucks. But again, those probabilities are off the charts.
Kevin, this is one that's almost perfectly in line with kind of our 30 cents on the dollar benchmark, $2 wide at 55 cents. It's just under 60 cents, but, pretty darn close, where it's safe to say, we're basically in line with those guidelines. That's more of a simply just a guideline, a target area. It doesn't have to be exactly on the penny. Break even would be 135.55, so above that 52-week high to the upside, to JJ's point. And also, like we said, this is something that, really doesn't need anything to happen. And that's the part that we always stress when it comes to selling credit spreads, Kevin, whether it's a put vertical, whether it's a call vertical, is that the market has to actually move to break these trades. If nothing happens, that's actually beneficial for this particular trade.
Yeah, exactly right. And, this stock, putting on a high probability trade above the market currently in Walmart. Remember, they came out July 7th with Walmart Plus. That's why this stock went from about the 118 level up to this 130 level. Is their direct competition now with Amazon with Walmart Plus. That said, this stock has run quite a ways. So you can say, well, okay, some of the news from Walmart Plus has already been in this news. Are you betting it? Do you want to bet it to go higher than this? Or if you were trading it down there, are you taking profits on that trade, that bullish trade, and now taking the other side? Remember, this has a 64% probability of finishing out of the money on that 35 call, and you've only got 15 days to grind up towards a new all-time high in this name. So it's a high probability bet, taking the other side as we look at the overall market kind of pausing here. So it's like I said, it's a risk-defined, high probability bet in Walmart that this move that's already taken and the news that they have out is priced into this stock already, guys.
And so what I'm going to do here, guys, JJ talked about the risk on this trade. Of course, you take the width of those strikes. So $2 wide in this case. Take out that 55 cents if we're filled there. That leaves you with $1.45 in risk, or $145 in risk for every one of these spreads. That takes place on anything above 137 at expiration. And of course, if it stays below 135, we keep that credit received. In this case, it would be 55 cents. I'm going to go ahead and sell 5 of these here in the example portfolio, and we'll work those at a 55-cent credit. So that would be $2.75 in max profit, alongside $7.25 as a maximum risk here on this particular trade. We'll work that throughout the break, see if we're able to get a fill. JJ, want to appreciate and thank you for joining us. As always, JJ Keenahan, Chief Market Strategist at TD Ameritrade. Kevin, we're going to take a short break. When we get back, we're going to talk some Netflix, kind of the earnings of the week. So we're looking forward to that. Stick around. Fast Market. We'll be back in 2 minutes.
Welcome to the TD Ameritrade Network from home. We're giving you in-depth, step-by-step analysis of what market volatility means for your portfolio.
If we can show some consistency on the upside here, that may pressure those stocks as people are willing to reallocate those resources elsewhere.
We are seeing volatility fall as the markets have also been falling, and I think this is something that is a new normal that we're moving into.
You really got to pay attention to the headlines. You really got to watch how the market reacts to headlines.
Combining trade ideas and strategies with award-winning education from the experts and veteran traders you trust.
Maybe there's an opportunity to write some covered calls on some stock if you've gotten it at cheaper prices. I think if you're a trader and you're watching and listening to the news, you have to have the features on your radar at the very least.
It's 100% free, anytime, anywhere, on any device.
TD Ameritrade Network. No politics, only markets, always ahead.
It's a 13-hour flight. That's not a weekend trip.
15 minutes.
Oh, wow, you're going to take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. Nah, they're getting so smart.
Choose the app that fits your investing style.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Welcome back to Fast Market. I'm Alex Coffey, joined by Kevin Hinks. Kevin, S&P's down 17.5, NASDAQ down 173, Russell down 6, and the Dow down 56. The Dow, the outperformer, only down about 0.5%, with the NASDAQ, the laggard, down about 1 0.6 percentage points here. Kevin, when I look at the heat map here, I always like to do this, especially when you see kind of wide ranges of different performance among the major indices. And hey, it's kind of, what we've seen is the theme here, Kevin, where what had brought us to these new heights, which is these big mega cap companies, your Apples, your Microsofts, Alphabet, Facebook, Amazons, they kind of, did the heavy lifting on the way up. And now that you're starting to see these other areas catch up, as maybe some money's coming off the table and some of these ones that have been big winners, it can be a huge, discrepancy in the number of companies that are actually up on the day versus down in the day. But if these big companies are down, it's just hard to, overcome their mathematical weight, except for in the Dow Jones, which we've talked about as a price-weighted index. Apple and Microsoft just don't quite weigh as much as they do in the S&P 500 and the NASDAQ 100.
Yeah, it's important to check the heat map, Alex, to see who's outperforming. And in a day, it's easier for me because I have them on my watch list. It's a day where the 4 major indices are down and the financials are up. Only Bank of America is the only financial that is down on the day. You look at the heat map of the Dow Jones Industrial Average, it's got financials in there that are all in the green today. And you take Apple, Microsoft, and maybe Visa and Boeing out of the Dow, it's a pretty green day, actually. And at worst case, it's an unchanged day in the Dow. So obviously, Apple being in 3 of the 4 major indices is always going to weigh. When you look and see Apple down, $6 on the day, 1.5%, that's going to weigh on at least 3 of the 4 major indices, the Russell being the outlier there. So, yeah, I mean, using the heat map is a great way to figure out if there is a rotation and where are they rotating to as it breaks it down by sector. It's a fabulous tool.
Yeah, absolutely. And of course, the NASDAQ, it's a huge component when you're talking FANG, and you throw Microsoft in there as well. You're talking about 50% of that NASDAQ 100. For more conversation on one of those FANG names, we'd like to welcome in Evelyn Baker, a TD Ameritrade Network contributor. Talk some Netflix. Evelyn, welcome to the show. Good morning to you, and thanks for joining us. This is one that I think we've all been looking forward to in terms of hearing what they have to say on earnings because, well, one, it's one of those FANG names. It's the first of these big tech companies to report. But how do you follow up last quarter after those absolutely incredible subscriber numbers?
Hi, guys. Yeah, thanks so much for having me. Right. So Netflix does report earnings today after the bell. And, Netflix has really become known as the ultimate stay-at-home stock. I mean, this company brought us all Tiger King at a time when we all really needed it. And it definitely seems like it was so long ago, so much longer than it really was. But yes, Netflix reports earnings this afternoon. And the company previously forecasted revenue growth of about 23% year over year for the quarter that just ended, which it reports on today. And it also expects an additional 7.5 million new customers. But yes, we did see last quarter's earnings were really, really great. And the company does still expect to see some strength coming out of this past quarter, even though a lot of other companies are getting hit hard. But I do want to say, and this one comes from a Twitter user named Gary Mack. And Gary Mack says that if Netflix released a documentary as good as The Last Dance every week, I would never leave the house. So The Last Dance is the Michael Jordan biopic that, pretty much everyone across the world seems to have watched. And it averaged about 5.6 million views across all 10 episodes when ESPN first aired this back in April. So ESPN and Netflix signed a deal that gave Netflix global on-demand rights, which means that Netflix has been airing The Last Dance globally, receiving a very high audience. And then also this weekend, it will release The Last Dance, all 10 episodes, I believe, on Netflix domestically. And so while the show was incredibly popular, both on ESPN and on Netflix globally, I mean, this type of popularity isn't really sustainable as a partnership like this is unlikely to happen again, especially since, ESPN is a Disney company and Disney Plus and ESPN Plus have both come out since then. But I want to go ahead and transition to our next tweet of the day. And this tweet is from a user named Delia. And Delia said, "Is anyone still using Disney Plus? It's so boring because after a while, you realize they just have a bunch of exclusive movies and that's it. Definitely not like Netflix or Amazon with all their original content." So, Delia's personal opinions aside, what we do know across all of these big streamers is how pivotal this original content is to them. And Netflix has said that the global film and TV media production shutdown won't really affect its quarter that ended in June, which again, it reports on this afternoon after the market closes, and because most of their films and TV from 2020 and 2021 have already been filmed and are in post-production right now, just being finished up. But guys, my question for you both is I'm wondering how this will affect Netflix, in 2022 or the years down the line, because it seems like they're missing out on, the opportunities right now to get ahead, to start making, this original content for the future, which, will probably harm their competitive aspect in this space, and potentially their stock price as well. Guys?
I'll take this one, Alex. Netflix, the problem with production growth and new content, the good news is for Netflix, that's everyone's problem, right? No one can bring out new content right now because all the production studios are shut down. The two questions lingering over Netflix for this earnings is this. If you're not on Netflix now, will you ever get on Netflix, right? There's one. And the other one is every bit of good news that could possibly be disseminated by Netflix already reflected in the price of the stock? That's what traders have to decide about today as this earnings about. Obviously, the growth numbers are all over the board. It's 12.5 million. It's 10.5 million. There's a range there of how many subscribers they're going to add. There's really good numbers from international as India doubled their subscription, Japan tripled, and Indonesia quadrupled their subscriptions. So the growth is there. The new products, new releases they're all kind of in the same boat. The real question is, has the stock run too far, too fast, guys?
Well, and Kevin, as we say goodbye to Evelyn, which she leaves us with some interesting thoughts here. As we say goodbye to Evelyn, thanks, Evelyn, for joining us. We want to welcome in Landon Swan to help us clarify this. Landon, of course, the co-founder of LikeFolio.com. Landon, I'll just kick it to you with this. I mean, Evelyn gave us some interesting kind of perspective from the tweets regarding Disney Plus and whether or not, it's all it was cracked out to be. But when you look at this, Landon, listen to this. Netflix market cap on our heat map here, $226 billion. Disney market cap, $214 billion. So is Netflix truly the king of content now? And does Disney have to hand over that crown?
Yeah, I think that Netflix is clearly the king of original content. As Evelyn pointed out, they've got a ton of legacy stuff, but just like that Twitter user says, once you've seen it a few times, your kids watch it a lot. I know, Kevin, that we talked about this, how the young kids like to watch stuff a lot. I can't count how many times I've seen Frozen in the background of my house. But, you can only watch things so many times, at least as an adult. And original content is absolutely king. Netflix is the king of that. They're doing extremely well. We've got fantastic numbers for them. We've got new subscriber mentions at 34% quarter-over-quarter growth, which is fantastic. We know that, cancellation mentions are down despite the fact that subscription fatigue is up. So people are tired of having to have too many services, but they're not canceling Netflix. So it's a fantastic place for them to be. And you can kind of see here, it's a chart of 4 different services: Disney, Netflix, Hulu, and HBO Max. And you can see that when Disney was launched, Disney Plus, that is, when they launched, they brought everyone with them. Because you're getting a Roku for the first time and you're like, hey, I got to get this to get Disney. And, there's all these other things I can subscribe to. And so they lifted everyone up. And then, of course, with quarantine coming in, streaming was big. It was absolutely monstrous. You had to have something to do. So this is going to be a huge quarter for Netflix because of all the people that had to stream during quarantine. A lot of people signing up for the first time. And as you can see from this chart, of course, they've pulled back from that big spike, but they're still the king. They still get the most mentions. HBO Max had a nice launch there, but, nothing like Disney's. And so very interesting chart. And overall, we know this is going to be a big quarter from Netflix. But I think when you talk about, have they run too far, too fast? If you would have asked me Monday morning, I might have said yes. But, then they sold off about, 8 or 9% on Monday. And so now they're back around 515. Very volatile stock. I would say that I'm buying on any kind of significant dips. And that's where I'm at with Netflix. Very bullish long term and just looking for good buying opportunities.
Landon, when I look at your presentation and your graphs, the first thing that jumps into my head is competition. There's competition there, but the second thing that jumps into my head is Netflix seems to be extending its lead over the competition and frankly doing it better. And their international growth is gargantuan, and it looks like though the U.S. growth, obviously the pandemic has done amazing things for their U.S. growth. But you're right, Landon. I mean, this stock a couple days ago was a runaway. Now it's come down from the 575 level to the 515 level. So now, I mean, it's just a couple days ago, you're right, it did look expensive and crazy, and now it looks, well, frankly, a little less crazy. But here's my question. Does it appear, as your graph shows, that Netflix is, number one, resting at higher numbers than it did before the coronavirus, right? The spike, and then it comes down, but at higher numbers. And number two, is it extending its lead over these companies? Remember, these companies are big hitters, Landon, but Netflix seems to still be winning.
Yeah, they're definitely big hitters, and I know that Disney is going to figure it out over the next few years, original content. I have no doubt that they're going to come out with a lot of really good series, but I don't think it's necessarily a question of Netflix or Disney or HBO Max. People are willing to pay for multiple services. The prices are low enough at $5 or $10 a month that you can have many and still be under what your cable bill used to be. And so I see them as being the number one. To answer your question, they seem to have a fantastic head start, and they know how to create fantastic original content. So I only see them extending their lead, but I don't even worry that they have to, because I think it's one of those rising tide situations that's going to lift all boats, and they just happen to be number one in a fantastic market right now. We look at that quarterly chart of the fiscal quarter mentions, and I know this is supposed to be a record revenue quarter for Netflix, and we've got it as a record purchase intent for Netflix. So we are in complete agreement with the street. I think everyone knows that they're going to put up a really big number this afternoon after the market closes. Of course, the current quarter, that one on the very far right, that's only just a couple of weeks in, that is much lower pace because the quarantine is sort of over. But this is a subscription basis, subscription company. So when they get all those people coming in over the last 3 months, they're going to discover a lot of fantastic content, and they're going to keep going with Netflix. So this is a chart of people talking about signing up for Netflix. So this is revenue in the bank for years to come. Really strong numbers out of Netflix. Again, very bullish, just wanting any kind of pullback to get more shares.
Well said. And even looking at that pace, while it looks like a drop-off in the last two quarters, it would still be incredible if you take those two outlier quarters, given the quarantine out. And so definitely been a strong year so far for Netflix, and we'll see what they report. I wish we had more time, Landon, but we got to say goodbye. Landon Swan, co-founder of Likefolio.com. We're going to take a short break. Kevin and I get back. We're going to take a look at an example trade in Netflix. Stick around. Fast Market. We'll be right back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You said it. NASDAQ. Rewrite tomorrow.
Oh, yeah, I gotta take off.
Now, you downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
Welcome back to Fast Market. I'm Alex Coffey, joined by Kevin Hinks. Kevin, S&P is down 23 points, NASDAQ down 174, the Russell and the Dow both down about half a percentage point. Bonds bouncing a little bit here, 180.12, up about 2/3 of 1% or 1 full point here. Gold has been really quiet the past few sessions, 1807, but it has held this $1,800 mark for weeks now. It's appeared. At least in gold, so still elevated on historical basis. Crude oil not able to stay above 41, but still well above the $40 mark. And volatility not really supporting this down move, is only up about half a point to 28.16. But we do have elevated volatility on a historical basis as well, Kevin. So not necessarily a strong reaction in volatility, but still remaining elevated, as we've expected with all the uncertainties out there. Kevin, I want to talk some more Netflix here because there's so much to unpack before we dive into a trade. And the one thing that Netflix, at least to me as a consumer, that it's always seemed to do, and it's only been kind of like a light's been shown on this as the quarantine has gone through, is Netflix has always just seemed to have what the people who are watching it want to see. And what I mean by that is before we really were big streamers and it was kind of the new thing, it had all these different TV shows. It had things like Breaking Bad and Lost and Prison Break come to mind as early shows that were kind of watched on Netflix that kind of, added to its popularity. This idea of binge watching, it kind of was created on Netflix. Then you kind of keep going down and it had some movies and stuff, but really it was now during the quarantine that it had all these docuseries and original content that, these other services just don't have. Things like Disney Plus just has a bunch of old Disney movies and some, National Geographic type of things where you see some stuff on animals, but there's not these crime thrillers or the Tiger King. And it's almost like Netflix just has all this stuff. It just sits there dormant. No one even knows it's there. Then all of a sudden it's just the most popular thing.
Alex, original content is tricky, right? And Netflix made their bones showing old content, right, that was guaranteed to be popular. When you get into new content, now there's a batting average that comes in. And maybe for every one that hits, 2 or 3 miss. So that's a different scenario in a company like Netflix. That said, they have had a fairly productive batting average, picking out new content and finding what the population finds popular, and to their benefit. That keeps them current and keeps them popular and keeps subscriptions rising. And then, of course, you had the geopolitical pandemic, push people even more onto Netflix's platform. So, they've done a good job of maintaining their quality of their content, and the overall world we find ourselves in hasn't hurt them either, frankly.
Kevin, the one thing that I want to, ask you about on this is, because it's a subscription-based model, does that change their batting average? Do they have to be as successful as a Disney when it, produces some, massive film where, let me try to explain it this way. If Disney flops on a film and no one goes and sees it, that's just a loss. If Netflix flops on a film, as long as they don't flop on too many and you don't cancel your subscription, they just got to do just enough to keep you subscribed, and just enough that one goes crazy and everyone joins at that time of the year is kind of how I see it. And that model seems to be, working pretty well for them.
Just go to Amazon, just go to Costco, just go to all these subscription membership-based organizations, and that promotes consumer loyalty, right? I'm a Netflix member, so therefore I watch Netflix. I'm an Amazon Costco member, therefore I watch Costco. That's why Walmart's stock jumped on their membership. So, yeah, I believe that, Alex. Membership promotes, higher loyalty.
Yeah, Kevin, we got to look at a trade here, though. We're coming close on time, so just jump right into it. What were you looking at here? Going into earnings, to Landon's point, it moves around a ton, $45 expected move. What's caught your eye?
Here's my theme, all right? We're going to stick with our Iron Condor strategy. That said, we're going to take the heightened implied volatility and move out our strikes. So it's the expected move plus $10 is where we're going with our Iron Condor. So on the upside, Alex, we're going to go the 570, 575 call vertical. On the downside, the 460, 455 call vertical. So that's the expected move of $45 plus $10 in either direction. And because of the implied volatility, Alex, we're still above that 30 cents per dollar.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the Income Investing course and a whole lot more.
In case you missed it, TD Ameritrade Network is now streaming after hours.
What, did you oversleep again? Or maybe you're just looking for the information you crave about the markets you trade.
Friends, don't let friends go slow. Watch Fast Market Replays on the TD Ameritrade Network.
Even though your day may be virtually over, we're still here, so you don't miss any of the market action.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
This piece is talking to me.
Yeah? So what do you see?
I see an unbelievable opportunity. I see best-in-class platforms in education. I see award-winning service and a trade desk full of experts available to answer your toughest questions. And I see it with zero commissions on online trades.
I like what you're seeing.
It's beautiful, isn't it?
Yeah.
TD Ameritrade now offers 0 commissions on online trades.
Traders is a 30-minute fast-paced look at what's moving the markets you trade.
It's about to move in the overbought area. That's not a bad thing.
Stocks, bonds, ETFs, commodities, your double dose of energy.
It's looking at the deeper dive. It's not just about their earnings.
Join me, Ben Lichtenstein, the host of Midday Movers with Lichtenstein, Monday through Friday at 1:30 p.m. Central Time, right here on the TD Ameritrade Network.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay. I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our Active Trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today. Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
This is TFNN, the Tiger Financial News Network. TFNN.